let's talk about Spain and Portugal. You can be in Spain, you can be in Portugal, and as a foreigner or an expat or a nomad living in Spain or Portugal, or one of the other European countries I mentioned, you can make an election with the tax authority to treat your income in a specific way, where they will only tax your domestic income. So in this case, Portugal, only the money arising from in some sort of income producing activity in Portugal will be subject to Portugal tax. The rest will not. So stuff that you earn in the US is not subject to tax. Same in Spain. But there are exceptions. It's very, very nuanced, and this is where having professional advice comes in. If it's rental income from the US, it won't be subject to taxes in Portugal. But if it is securities income or if it is pension income, the answer is yes, it will be subject to tax both in the US and in Portugal. Now, up until I think it was around March 2020, the pension income would not have been subject to taxes in Portugal. But there were some complaints within the EU from the Northern European countries. They complained to Brussels and they put pressure on Portugal to amend that part of their tax rule. So if you are, and I'm talking about those who are in Portugal under the NHR or the non-habitual resident status. So your US income, that's business as usual. But if you apply for and you get NHR status, only your Portugal source income will be subject to tax. Your US income, no. But there are exceptions, one of which is securities income. But rental income won't be subject to Portugal taxes. And your pension income as of March last year, your pension income will also be subject to taxes in Portugal. If you grandfathered in, so if you had NHR status prior to the change in the rules last year, no, you won't be subject to, even the pensions won't be taxed in Portugal. So depends on when you got NHR. So again, Europe, very general, but I think these are the right questions to ask as a US person. Just take it as given that you will be subject to taxes on your worldwide income regardless of where you reside. So the question becomes, yes, I have US taxes to worry about, but I also have taxes in the other jurisdictions that I'm exposed to. How can I plan? How can I execute things in a way that minimizes my tax burden across both? And sometimes we have to do calculations that look at, well, you know, by taking certain actions in, let's say, Singapore to reduce your Singapore income, you may actually be increasing your taxes in the US, and vice versa. By adopting and leveraging certain strategies to reduce your US taxable income, you may inadvertently increase your Singapore income. So they can't be looked at in isolation. You're asking the right question. My US side, I need to look at, but also the other jurisdictions in which I'm exposed. I need to look at both simultaneously.
Please subscribe, like, share, and comment below. Our books and upcoming events are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.